Is it really possible to raise your credit score even while you're in debt? Well, I'll answer that question, and I'm gonna give you my best tips on how to increase your credit score no matter your situation. So number one, this might seem like common sense, but start making your payments on time. That's kind of a key thing, right? If you want to make sure your credit score keeps building, it doesn't matter how much debt you have necessarily. There are a few factors there, but for the most part, if you want your credit score to build, believe it or not, having debt actually helps your credit score. So if you have debt, if you keep making more payments on time, this is the number one determining factor of having a healthy credit score. So start making those payments on time. If you have a hard time remembering, put them on automatic payments. I know that can be scary. I know there's a point in my life where I can get it. I mean, my credit score was crap during the last recession. I had like a 480 credit score. That's like taking your standard achievement test, your SATs, and getting your name right. That's kind of like what my credit score looked like. It was horrible. But I'll tell you, the thing that started to build my credit score again was making those payments on time every month. And it was hard because I remember going to the grocery store and watching those balances bounce, right? You know, you go and try to use your card at the store and they say, hey, sorry, the card didn't go through. Like, oh, well, take off these few items. Try it again. Sorry, it didn't go through. Okay, take off these items. You know, and pretty soon you're taking off almost everything off the grocery belt. And then that's what you're left with before you can like, okay, that's it. That's all I can afford with groceries this week or this month. I've been there, guys. I know what it's like to struggle and do that. But I can promise you, if you can find ways to make your payments on time, if you can even do automatic payments, that will help. You want to make sure that's happening. So make payments on time is the number one thing you've got to do. By the way, guys, as a reminder, subscribe and like to our channel. If you love this kind of stuff, you want to see more, subscribe to our channel right away because we got a lot more good stuff coming your way. All right, number two. All right, focus on one debt at a time. One of the big mistakes I see with clients is that they'll start spreading out extra payments to all of their debts. They'll put a little extra here, maybe 50 bucks here, 20 bucks there, $30 here, $100 here, and they're just trying to pay off everything. And it's kind of like if you're trying to put out a fire and you get out your little garden sprinkler, you know, the one that's like this, like, you know, like it just goes back and forth, like the old school ones. I'm not talking about the, you know, like that's like shooting a machine gun. I mean like the little streams going like this. Like that. Try putting out a fire with one of those things. It doesn't work really well, does it? The best thing you do is have a hose and fire at one location to put out that fire instead of all around, right? That's what you want to do. Focus on just one debt at a time. Now, I'm going to give you a little bonus tip here. This is big. Here's the debt I chose because remember, I was over $1 million in debt. I was buried deep in the hole. But I avoided bankruptcy by focusing on this. When I focused on one debt at a time, I didn't aim for the best interest rate or the highest interest rate. I actually went for the loan that had the highest payment with the lowest balance. I didn't always go for the lowest balance, but it was the highest balance or highest payment to balance, low balance ratio. I call this the cash flow index. I've had other videos on this channel you can look up, but the cash flow index is this. I take that loan, I divide it by the minimum monthly payments. And when I do that, guess what? I get a number, right? So for example, let's just say you have two different debts that are $10,000 a piece. One of those debts is $200 a month, while the other one is $500 a month. Now, someone might say, okay, well, which one's the credit card? Well, what if it's a $200 a month credit card, right? Say it's 18%, and let's just say the $500 a month one is an auto loan at 3%. You might say, well, I'm going for the credit card because that's what Dave Ramsey told me to do. Don't do that. If you want to get out of your hole faster, aim for the $500 a month one. Go for that one because that's the bigger payment compared to the balance. So if all you had was 10,000 bucks, pay off the $500 a month one because now you have more options. You could always take the $500, apply it to a $200 a month credit card, and you'll pay it off in less than a year and hardly get charged any more in interest. That makes sense. But if anything bad happens, I guarantee you that if money gets tight, you would much rather be paying a $200 a month payment than be stuck with that $500 a month payment because you follow Dave Ramsey. You don't want to do that, guys. You want to make sure you're focused on the one that has the lowest balance with the highest payment ratio. That I call the cash flow index. The lower that index number, the better. So there's my little bonus for you today. By the way, if you think this is awesome, be sure to stick around because I got some more good stuff coming up too. All right, number three, this one's counterintuitive. Don't cancel your credit cards. So many people think, oh, I got to cut up that credit card, freeze in a block of ice, all those things that Dave Ramsey tells you to do. Don't cancel your credit cards. Ironically, when you cancel a credit card, you actually get rid of your credit history. So let's just say you had that credit card for 10 years. You cancel it, and the next thing you know what happens? You lose all that history, right? Well, big part of your credit score is what's the average amount of time you've had those lines of credit. Well, if you cancel that 10-year one and say the other two credit cards you have are 1 year old apiece, all of a sudden you went from, a total of 12 years divided by 3 is 4 years credit history, which is better. Instead, now you went down to average of 1 year. That actually hurts your credit score. So when you cancel credit cards, it hurts your credit score. Now, if you had to cancel a credit card, cancel the newer ones. That's most likely the better ones to cancel. But I'm gonna just say, don't cancel your credit cards, even if you don't use it. And by the way, if you wanna make sure they don't cancel it for you, because there are credit card companies that will do that, every 6 months, charge up on it and then pay it off. So you don't get charged any interest. Charge up on it, just, maybe you fill up your gas tank with it or something like that, and then pay it off. The worst thing is when you don't cancel it, but they cancel it for you because you're not using it anyways. So make sure you're every 6 months, this is a little bonus tip for you, every 6 months, keep using those cards just to keep them active, keep them around, and I'm telling you, the bigger that history, the better your credit score builds. Each and every month, you'll see that score tick up and up, even while you're trying to pay off your debt. All right, number 4, avoid new debt. Okay, so I mentioned if we have new credit cards, those are the ones that cancel. But if you keep getting new debt, this can actually hurt your credit score because for the same reason I just mentioned, that average time you've had that debt becomes less. Because now if you had it for 1 month and then everything else you've had for 5 years, your average gets brought down. That can actually hurt your score. So avoid new debt. And even more importantly, if you're trying to get new debt because you really just can't get out of debt and you're just going in the hole more, you need some major triage here, right? We need some financial triage. We better make sure that we're getting your numbers under control. So if I were even give you another additional bonus, be sure you're tracking your money. Make sure that you're spending less than what you're making and track that every single week just to stay on top of your finances because we do not want to have to add more debt to what you have. And if we can avoid new debt, you can actually keep your credit score building and then we can add in new debt later. But let's keep it going. All right, now I'd love to hear your comments. Like, what are some of the things you've done to help you avoid new debt? Comment that below. All right, we've come to it. The big bonus I've been talking about, right? How do you actually build your credit score? You can become an authorized user. Chris, what's an authorized user? I don't know. I was telling you, I didn't know that either, okay? So let me tell you what that means. I remember I was listening to this credit score type of education I was getting, and they talked about how if you get a credit card or you get added as an authorized user on somebody else's credit card that has a lot of history, especially good history, your score boosts up. So I decided to try this. So in 2006, I went to my dad. I said, hey, Dad, and I was about 29 years old at the time. I said, Dad, I want to become an authorized user on that credit card. You remember that Visa card that you helped me use pay for books in college? Yeah. I want to become an authorized user. Why? What do you need it for? I'm like, I don't need it. In fact, we're going to send it to your home address. You're going to shred it. I don't need it. I just need to become an authorized user so it shows up on my credit report. Well, Chris, what does that do to my credit? Nothing. It does nothing to your credit at all. In fact, you're free and clear. If anything, it threatens me because, people have to, I have to disclose my social security number to you, even though he already knows it. But I was like, I have to give you all my personal information. I don't need any of yours. So I'm the one at risk, not you. But I do want to become an authorized user on that card. So he did. He put me on that card. And guess what? A month later, it shows up on my credit report as if I've had it since I was 17 years old. Okay, so it looked like I had this credit card since I was 17 years old, like an 11-year history. My credit score boosted up 23 points overnight just by being added as an authorized user. So guys, that's one thing you could do. You can actually become an authorized user. It could be on a spouse's credit card. Maybe they have better history on the card or longer history. It could be on your parents. It could be on a friend. It could be a random person. There's actually people out there selling you options to be able to do this kind of thing. Heck, you could actually make money being the one that has a credit card that helps other people boost your credit score too. That's a bonus tip for another day. So anyways, guys, it's huge. It's a great way to boost your credit score overnight just by becoming an authorized user. All right, guys, if you think this was creative, check out this next video, how to make $5,000 a month in passive income right now.